Saylor has said at some points along the way that that owning Bitcoin and owning strategy are two different things. That you can own Bitcoin in a way that eliminates counterparty risk, and that when you're buying strategy stock, you're inheriting the counterparty risk that comes with it. And that the reason to invest in strategy would be to effectively put Bitcoin at risk with the goal of acquiring more Bitcoin, which, if you are investing any money, should be the goal. Yeah. If you have come to understand that Bitcoin is the benchmark, that it's the form of money that will best preserve purchasing power for the reason of its 21 million fixed supply. So in my view, owning strategy is not a replacement for owning Bitcoin, and anybody that's buying strategy should also, if I'm giving financial advice, should also own Bitcoin and be understanding and intentional about the fact that they're putting Bitcoin at risk by owning it. I personally don't own any strategy stock. I just save Bitcoin. I think it's the slow and steady wins the race. But because there is an opportunity to arbitrage fiat capital markets, it is possible for a period of time for strategy to outperform Bitcoin. But you need to understand the risks associated with it. And I also don't think that opportunity continues to exist long into the future as more people figure out the benefits of holding Bitcoin directly. So in the short term, I do think that there's an opportunity, but it also doesn't mean that anybody copying strategy or Michael Saylor will be able to do the same. That being able to arbitrage fiat capital markets like convertible debt, and be able to do it in a way to mitigate the risk of those arbitrage opportunities. Not every financial engineer is equal. And so strategy, Michael Saylor have historically proven to be highly effective at it. It's the same idea of if there's a high frequency algorithmic trader, they might be able to outperform the S&P. And if somebody just showed up new tomorrow and tried to do the same and didn't have all the technology or wherewithal, wouldn't be able to affect the same ends. And so I think that the basis of anybody thinking about it needs to, own Bitcoin first, understand the case for owning Bitcoin, and then understand the strategy involved themselves. But certainly viewing any Bitcoin that they were putting at risk in owning a financial asset, it's truly capital at risk. It's capital at risk with the idea of ultimately earning more Bitcoin, in their case, per share. And to only do it with an eyes wide open, understanding that with any investment comes a risk of loss. The way I view Bitcoin is it's the least uncertain. It might be volatile, but it's the least uncertain asset for the reason that its fixed supply is credible. And for me, day to day, I focus on building a company and delivering a service, and I save whatever money I can in Bitcoin, and I put what I put at risk in, the endeavor that I'm building. But it's just to know the risk and understand the risk reward, and to weight it appropriately. But I think in all scenarios, you need to own Bitcoin and then make investment decisions, whether it's strategy or building your own business or investing in any endeavor, with the idea that it only becomes, quote, worth it if it's able to produce more Bitcoin than is put in, or that you otherwise could have saved in Bitcoin. Mm-hmm. And I think he would say the same.
Absolutely. Yeah. I look at it, it's that often talked about in Bitcoin circles, at least, the CAGR and compound annual growth rate of, whatever, we'll call it 60%. And can you get over that hurdle rate? And for me, it was the last 10 years I stopped a few years ago, I guess, but but when I had my real estate, team, it took the amount of man hours and capital it took to find good investment properties and then, to fix them up. I mean, there's a few things where like, leverage buyouts, which is what, maybe, the BRRRR strategy in real estate would be, where you're raising money, you're finding homes that need to be fixed up, you're fixing them up, refinancing them, putting tenants in, getting the cash flow from them. I mean, just the time and capital it takes to do that. Like, how many people can go do a leverage buyout of a business or go do all that? I mean, I had multiple people. It was thousands and thousands of dollars a month just to do that. And then you're looking at Bitcoin. You're like, well, wait, I can just save in Bitcoin and it's 60%. I mean, theoretically, you can get an infinite return if you're using other people's money with these leverage buyouts or, doing this with real estate. But it's such a select, small few people with experience, knowledge. Got to raise the capital. You got to do all these things. And then even when you do it, you're then at the mercy of the municipality. I mean, like, where are you? Like, government's collapsing. They need more money. The tenants that are in the property. So like you're on the hook always. You're paying property taxes. It's just like, wait, at some point in 5 years ago, I'm like, what am I doing? Like, this doesn't make any sense anymore. So
yeah. And, like the way I think about, I don't know what the current premium is for strategy, but if it's 3 to 1, and you were going to invest $100, he needs to be able, $100 worth of Bitcoin, that he would need to, functionally triple the amount of Bitcoin that he's holding that you could otherwise purchase and just hold directly. And I think, again, over time, it becomes harder and harder to do that as more people value Bitcoin. But I certainly, understand and appreciate how, and I would say, so long as there's an opportunity to arbitrage fiat capital markets, it will be possible to do that. But for anybody individually allocating, it's, should I be happy just owning some Bitcoin and then going into the world to try to generate cash flow to deliver value to others to then save more in the form of money that can't be printed? That's the real signal.
When do you think, because it seems like, and much more of this than I do, the Silicon Valley, Wall Street, it feels like Bitcoin is still the redheaded stepchild, where it's just like, yeah, like, you guys are doing amazing, but like, at what point does Wall Street, I mean, like, after you're seeing, what Strategy's doing, and then all these other companies now jumping on board, and like, hey, now Steak and Shake's doing this, all these companies are starting to do this. Is there some tipping points when gradually then suddenly in your eyes, or is it just, again, like this, going back to like this just education, where it's like just chipping away one day at a time, where eventually we kind of wake up 5 years from now, 10 years from now, it's like, oh, like, wow, everyone's doing this Bitcoin thing, huh? Like, it just feels like it was still like people are just blind to it to a degree, whether it's in Silicon Valley, the VC side, or if it's, over in on the other end of the country in Wall Street.
Yeah. My view of it is that certainly today it's just chipping away. It's one mind at a time. People having conversations amongst their family, amongst their friends, sharing podcasts, sharing books, attending Bitcoin events to learn and garner knowledge. And so long, in terms of the question of gradually and suddenly, I feel like so long as people are having to ask the question of like, when does everybody rush in? It's like when everyone is, it will be obvious to everyone, and the question won't need to be asked. And that the real tipping point will be that critical mass of people where it becomes obvious to everybody else that Bitcoin is the consensus of money, and that they actually need that it becomes hey, this is the only currency that's working in storing value, and it's becoming more obvious day to day that the other currencies are losing value. And I don't mean having that inherent knowledge that the dollar is engineered to lose value, but that when you're going to the grocery store, prices are changing more frequently, and the dollar price of goods is rising, and your bank account is not going up with it. And that the true rapid monetization of Bitcoin, when everybody essentially when everyone else that hasn't adopted it is decides to, is when a fiat currency of a G3, G5 currency hyperinflates. When the euro, yen, yuan, or dollar hyperinflates. When a developed country's currency goes, that, in my view, is the tipping point for Bitcoin being obvious.
If you like that clip, then you definitely got to check out this next spicy clip. I think you're really going to like it. Come on, check it out. But if you want the full version, the full interview, then check that out over here. Come on, do it. I'll see you in there.